Okay. Good afternoon. Good afternoon. Hope everyone is good. We are starting again the new stream today. Just a little bit of patience. We just our technical team just trying to get into setting up everything so that we can be able to actually communicate and be able to hear everyone. So yeah, just hold on a second. All right. Thank you very much. Thank you very much to those who actually join in. But definitely the main reason of this stream today it's actually to just recap what has been happening in the market for the month of Jan to all the way to the month of Feb, and it is very very important just to have a little bit of idea in terms of how the market are doing and what exactly an instrument that actually affected us in the global market and how we can be able to actually prepare for the next session of the month. So there's a couple of things that actually happening in the market, and you guys, if you are tuning in live, you can be able to actually uh, ask any question. If you want to ask, can be a conversation. If it has to be something like a conversation, so that we can be able to have some sort like a engagement. You know. So the most interesting part that actually happening from the month of Jan to the month of February in terms of the global economic, it was the way payroll report was in the United States. So we realized that in terms of the payroll in the United States, there was a little bit of corrosion whereby numbers they were actually getting to estimated numbers that they were expected, and which is very very nice. If you were expecting you're going to hire over 2,000 people, for example, and you get actually maybe 2001 that are being employed, that means the numbers in terms of the data and in terms of people that are going to join to actually participate in a labor of United States, they're a little bit more, and what it translates to people who are actually going to pay tax in that particular region, and that means there's a lot of people that they want to be able to pay tax, and which is good for the economy of the United States. So if I can see here, regarding about my report, regarding my report, I don't know you guys you can see it, but okay. So the non-farm payroll report it was on a recently it was on a third of February, whereby okay, let me just pull my screen a little bit closer to me so that I can be able to see it quick. So obviously, it indicates the numbers of the job added from the previous month, excluding the farm employees, and the government employees, private household and employees from the NGOs. So NGOs, the farm employees, they're not included in this report. And we actually seen that the U.S. economy unexpectedly created 517,000 jobs in a January 2023, which is amazing in terms of how much people they're actually getting into that labor department, and the most since July. So that was the highest since July of 2022, and easily, because July 2022 there were 401,000 new jobs that are being introduced into the industry, which is February, 3rd of the Feb, the report talking about 517 jobs that are actually, employed in terms of, in the labor department of United States of America. So the job growth was widespread in Jan, read by the gains in the leisure. So the leisure department, hospitality department, they actually get to 128,000 jobs that they were employed. Professional and the businesses, business services. So professional and the business services, they were at a 2,000. And again, the other department, it's a health department that actually score 58,000 new jobs that they were actually, employed in the month of Feb. So this is very, very, I'm not going to lie, very important in terms of how it translates to the our global market, how we can be able to trade based on this thing. Because if you look at this report, it actually goes again to these numbers pushing on CPI report, and that CPI report, it follows on a PPI report, and all these reports, they actually translate in the global market when we are actually trading. So these are very, very important to, to keep an eye on it, and most of the time to keep on looking at these type of numbers, and to see if the employment are growing in terms of the dollar index itself, or the employment are actually dropping in terms of the dollar index itself. So after that, the report of NFP, we actually also see the inflation report, the report that actually drive the inflation of the United States, so that they can give us, whatever, basis points for people who are living in the United States, so that they can be able to uh, increase their product, and people purchase with a higher price, so that they make profit and the economy can continue going. So it's a CPI. The CPI is Consumer Price Index. The Consumer Price Index, which is actually, it influence the inflation rises at 0.5%. So over the last month in Jan, it actually rises at a 0.5%. And it's very, very nice from Jan having that, a little bit of a growth in terms of the inflation rates, which is very, very beautiful. And again, if we break down in terms of the CPI, Consumer Price Index, there's a different department that actually contribute to those, to that report of Price Index. So the government data showed on Tuesday, on an annual basis, the CPI roses to 6.4%, continually a steady march down from the 9.1% peak last June. So the peak of the consumer price index, it was actually 2022 June, and that's where we see another peak on January in terms of consumer price index. So that actually tells you that the consumers, they're actually buying the product. They're actually buying, participating in the market, so that, the market can have a little bit of more economy moving. And that's where we see also that in terms of the Feds, when they were releasing the report, and the report gets to 25 basis points, on a Jan, because of how the CPI, how the consumer price index actually, the report actually tells us how the consumers, participate in a market. So the economists had expected the price to climb from 6.2% over the year, and the jump to 0.5% month over the month per consecutive estimated from the Bloomberg, which is one of the biggest channel in terms of the economic, report. So that's where the report we get it from, Bloomberg, and as well as the core CPI, which strips out the volatility food and energy components of the report, climbed to 5.6% year over the year, more than expected, and 0.4% over the prior of the month. So the forecast day it was very, very, good, called for 5.5% annual increase from 0.5% monthly rise in the core CPI readings. So the core CPI readings, it actually deals with the volatility of energy sector, the volatility of food, sector, production of the food, or selling of the food or selling of the energy product. So it shows that, year to year it's been increasing to 5.6%. But when we see the NFP, it identifies that it was a little bit high comparing to what they were expecting. A week later, that's where we see the CPI also saying that it was a little bit of higher, comparing what it was before. So the numbers, in terms of the higher numbers, the last time that it was very, very high numbers like this, it was on June 2022. So basically, it says a lot in terms of the global market and how the global market is actually, going forward. So that was uh, the other one that the second event that actually follows. The third event that actually follows, it was the PPI, the Producer Price Index. So we have the report in terms of uh, labor bureau, people who are employed without non-farm people and without NGO. Then we have the report again of the CPI, Consumer Price Index, which is we see that the non-farm payroll, it was actually good. The payroll that comes on a CPI, I mean, the report that comes on a CPI, it was also better. It actually better, shows the stats. It was better than the last time it was good like that. It was June 2022. Then after that, the other report that follows on a month, it was the PPI. So the other event, it was the PPI, the Producer Price Index. So we see the report of how people contribute in a global market or in a United States economy in terms of buying power. Now we have to see, how the producers being produce, this product and how they actually being impacted into the global market. So the PPI news results, producer price index rose in January, but annual inflation continued to be cooled down. So the inflation was still on the 25 basis points, although we see the numbers actually, getting better. So it actually tells us that the economy started actually picking up from the last time where it was COVID-19, where people they couldn't actually, do the business, and that's why we were having the increase of 75% broad basis, 50% basis points, and we come the first of the year, January 1st of the 2023, actually offers us the 25 basis points, which was good. So the key inflation level here, the key inflation metric shows the wholesaler price picked up in January from the December, but continuing to cool on an annual basis according to the data released. Again, it was on Thursday, so it happened on Tuesday, last Tuesday. This one, it happened yesterday, which is Thursday. So the January's producer price index, which is the PPI, the numbers like consumer price index reportedly earlier this week come in a hotter than expected of 0.7% of a headline month of the over the month, above on 0.4% expected. So producers again, we're seeing that they're doing good. In terms of they were expecting to get 0.5 growth percent in terms of producing product that can go to consumers, right? But now the numbers are showing that it actually increases at 0.7% from 0.4 to 0.7, quite a little bit of growth in terms of the global economy. So this is what actually tells us that the global economy is starting actually, to grow. But again, in terms of the consumer price index, it's actually divided. It's breaking down in terms of, which sector deals with which sector contributed what number. All right. So This is the higher figure we have since seen in June of the last year, and still well of the 1.7% we saw in March 2022. So the biggest raise in terms of the growth of PPI, in terms of producer price index, it was in March 2022, where the producers product grew to over 1.7%. But now, because of all the COVID, everything, the economy has been, going all the way down and down and down. That's why this month, end of this month, beginning of this month, we saw the rise of zero point 0.5, comparing the estimation of 0.4%. So again, stripping out food and energy costs, the core print was still the hotter than expected 0.5%. This gain is considering below a 12-month higher in a March of 1.3%. But ex-food, energy and the trade come in at 0.6%. Three-time analysis expected to 1.0% in March. The PPI numbers can be seen as far as it grown at this particular time. So we can see that the energy and the food industry, they are the ones that actually contributed at this month from January to February in terms of the global economy. The reason why we're talking about the United States report, because of these are the major drives in terms of the global economy. So we should always look at these reports. Once we see this report, we can see how the market actually grow. Behind me, we can see everything it's on red. Oh, damn, it's crazy. NFP, it's crazy. Euro USD, S&P 500, Nasdaq, everything is going down. I don't know what's going on, but again, it might be the report that comes, the PPI report that we're talking about that comes on yesterday. Now, here's the tricky part. All the report that we're seeing from NFP, CPI, PPI, non-farm payroll, consumer price index, producer price index, they're all looking very positive. But why is that? When you look at the stock market, everything is falling down. Everything is having a loss. At some point, we've been seeing, the safe haven, which is called gold, actually fall the same way that the dollar index is falling. What makes him that? So, guys, ladies and gentlemen, just hold on a second. Let me take, a glass of water so that we can continue talk about why the market is continuing fall while we can see the data release coming from all these. They are actually positive. The positive data, market are falling. It's crazy time in the market. Just hold on a second. All right. It was just a short break, just to drink a little bit of water. So yeah, as what we were talking about, it was the easy thing. We've been looking at, all the biggest news, all the biggest news actually, on a consumer price index. We look at the biggest news in terms of NFP, and we look at the biggest news again in terms of the PPI. But we realize all of this. We realize that when it comes to numbers were positive, but we saw the stock prices, the stocks continue follow. We saw the stocks losing the power. I mean, day before yesterday on Tuesday, we saw Nasdaq, falling at 1%. We can see even behind me, we see 74% fall. We see 60%. What is this? 0.63%, 49%, 91 from Nasdaq components to Nasdaq, future to Nasdaq indices, S&P 500, all of them, they're actually losing power, losing value in a global market. But the results of, in terms of the global inflation, shows the positivity. So here's the reason why. The reason why these products are actually fall in the global market is because of the earnings of the biggest company in the world. So yes, the whole economy did good, but is the company did good as well, right? So now, in terms of that, we have to look at the biggest companies, in the US, the ones that actually major contributed in the economy. How was the earnings in terms of Jan to the Feb? It will take just 5 minutes, then we're done here. Then we can be able to join in on a Zoom session in terms of the training that we offer. We just late of the training a little bit. So in terms of the earnings, we actually have the first company that released the earnings this month. It was, I think, beginning of this month. It's Apple Inc. The Apple Inc. It's one of the biggest company when it comes to the tech instrument or the tech industry in the global market, in the market. So when you are actually a trader and you are trading, you want to trade Nasdaq, for example, Nasdaq components. Apple, it's one of the biggest company listed in that Nasdaq component. So it's very important to understand what earnings of these ones actually performing at particular time. So the Apple announced his first quarter earnings on Thursday. It was on Thursday. The report were missed on analysis expectations as reviewed fell for 5%, a year over of 117.2 billion. So they actually have a loss of 117 billion. It actually, the value of Apple instrument on a stock market actually, fall for 5%, which is a lot, not 0.1, 0.2, 0.3. This is a major thing. This is the biggest thing that can be able to happen in a global market. Is the biggest company, the biggest technology company in the world to have very, very, fall in the stock market. The reason why we can also look at, how where the Apple, gadgets are being produced. They're always produced in China. China has been having the lockdown. It means people, they're not actually going to work. So the productivity itself is not going to be there because of there's no one actually to go to, to work and produce those products. And so that Apple, they can sell and the share price can go up. So that was the number one, the reason why you can see Nasdaq continue falling, because of Apple. It's a major company that is listed on the Nasdaq components. All right. So the second major company was Amazon. Those results would have been a disaster. Just look at Amazon, which reported a full year, a net loss of $2.7 billion. So the Amazon, reported the net loss of $2.7 billion in a year of last year, the whole year. They didn't make money. Amazon is one of the biggest company in the United States that contribute in the United States economy. Yes, the labor shows that people are employed. The consumer price says that they are participating, they are buying stuff. The producers, they say that we are producing good stuff. but the company itself, the overall returns, the earnings of the company, they keep on falling. They actually fall on the stock market with a 4%. So you can expect, instrument like S&P 500, Nasdaq, to actually have spiking up. You cannot expect the dollar index to become strong and strong and strong. The third one is a Microsoft. The Microsoft, after announcing the slowing cloud growth last week, its shares were down about 1%. At least the Microsoft, they got a share down of 1% compared to Apple, where the share goes down to 5%. Amazon, the share price goes down over 4%, which is very, very huge, very, very big, comparing to all these, reports. So Microsoft was good. The share of Alphabetical, I don't know if people know the company called Alphabetical. The company called Alphabetical, it's a Google company, the company that offer Google. Yeah, when you are Googling, the name of the company is Alphabetical. So the alphabet Google, meanwhile, were off more than 1% after the company reported decline in terms of the sales. So Google itself as well didn't do good. They actually declined with the 1% as well. You would think Apple would face the same kind of the reckoning of a Wall Street as its praise, but of the non-Friday share of the iPhone maker were up more than 3%. So again, after they actually releasing the iPhone 13, I think that's where they pick up to 3%. After the fall with a 5%, still they are on a deficit of 2%. That's huge in terms of the big company like that. So the biggest news, just to recap of this month, including the natural gas prices, that's a positivity that we see even here in South Africa. We've seen, petrol or, diesel going a little bit down, from Jan. So these guys, actually, the natural gas futures in the Europe touches the 49 pounds, per megawatt hour on Friday, the lowest intraday level since September, the 1st of 2021. So the last time that it dropped like that, it was September 2021. So natural gas is actually better in terms of, in Europe. Again, in Europe, we see the French inflation rate edges to the high, to the 6%. So in France, things are very, very crazy expensive at the moment. At the moment, the inflation actually grows with the 6%. I think if I remember the news, we're talking about 50 basis points in terms of increase of their inflation rates. The annual inflation rate France since rose by 6% in January 2023 from 5.9% gain in December, in a line with the primarily estimated again in was very well in the Europe Central Bank 2.0% target. So the central bank is the one that actually contributed into this, French inflation rate in terms of increase or not. So no, so Mr. Shadrach, we didn't start. Actually, here's what we're gonna do. Because of the stream right now, we are finishing the stream. The stream was all about the recap of the month in terms of the global economic biggest news and how we're seeing the market going down while we can see the NFP was positive, the CPI was positive, and the PPI also were a little bit positive. So we're gonna go to the next stream, which is it's on Zoom. I believe you do have the Zoom link. I believe you do have the Zoom link. To those who have the Zoom link, so now we are actually about to jump in on a Zoom so that we can be able actually, to continue with a training. So this time around, remember, it's a training. It's no longer now, just a report. Okay. So yeah, thank you very much for tuning in. So this is what we're gonna do today. We're supposed to be with Lulama, so that he can be able also to put his 2 cents. So every Friday I'll be able just to get a little bit of someone who knows a little bit more in terms of the global economy, so that we can share the knowledge to each other. So again, we can do again in 3 weeks. This stream on YouTube, we're gonna do it again in 3 weeks. But the stream on a Zoom, it's every single Friday. Okay, send me a text on WhatsApp. I'll send you the Zoom link immediately. Or maybe let me just get a link here. Let me see if I can get you a link. Yeah, send me a text on WhatsApp. I don't know, it doesn't want to send the link. Okay. Oh, okay. I got you. I got you. Here we go. Okay, cool. So thanks a lot. Let's catch up on the Zoom just now.